2s down to 52s. So quite a nice outcome. Very nice outcome. But how good was it? Remember, on the face of it, it looks like it's a brilliant trade, but it's actually a terrible trade. Because I took way too much risk to get that trade on. And I want to show you the reason why. And I wanted to purposely do this trade so that we could show you that sometimes you get lucky. Take a look at this. Take a look at the trade now and tell me how good the trade is. It's kind of rubbish, isn't it? You can see smart money were buying into what looked like a very, very bearish storyline. So whilst I had a lot of evidence that this market was going to sell, the smart money disagreed with me. I wanted to sell. I mean, let's not make any mistake about it. I wanted the short sell, but there was evidence in the background that the smart money was buying this. And therefore, I had to be very, very careful about the sell. So in other words, I took way too much risk to get that $600 off the trade. Way too much risk. Is it a good trade? No. This is the important thing, because I remember the report, and we've mentioned it a few times in the room before. I remember Wall Street Journal, I think it was, or one of these publications had done a report, an article on all the outperforming young traders who had came through with an amazing trade on Bitcoin and an amazing trade on Netflix or an amazing trade on Nvidia, and they'd made fortunes, and they were the top performing trader that year for whatever reason, a lot of young guys. And then they looked at where they were a few years later, just about 2 or 3 or 5 years later. Every single one of them had gone bust. Every one of them. Not one had lasted. Why? Because the article was looking at outcomes. Potentially a lucky swing. Potentially a lucky swing. In other words, they weren't looking at the guys that managed risk properly, who then got involved. These guys aren't very sexy. The guys that look at the risk that's involved in making a certain profit. Because the world is dominated by the Elon Musks of the world, the Warren Buffetts of the world, who, may well have been born into a great position for whatever reason, or they got lucky. And they did get lucky through hard work. But they didn't work any harder than anybody else. Bezos didn't work any harder than the other guys that were building Amazon-type companies at exactly the same time as he was building an Amazon-type company. No harder, no better, no smarter, nothing else except that little stroke of luck, that little divergence in time that put him in the right place at exactly the right time. That wasn't hard work. That was just being disciplined, trying it and trying it and trying it, and then understanding that he got lucky. Understanding that he was one of the few that got lucky. It's like the people that do lotteries. You didn't earn the lottery money, but you can make yourself slightly luckier by doing more lotteries, right? You can get better at lotteries by doing more lotteries. It's just putting yourself in a position for luck, but that's going to cost you a lot of money. But it depends how you want to play it. But if you win the lottery, it's not because you've got a secret system to winning the lottery, although they try and suggest you do have a secret system to winning the lottery. The fact it's taken you 45 years to win the lottery suggests perhaps that it's maybe not a secret system. Maybe you just got lucky. So a lottery winner isn't better than anybody else. We're just lucky on that occasion. So this is what we've got to remember when we're looking at our trading. It's about remaining consistent with our ideas. And sometimes we have incredible swing profits. And sometimes we have incredible scratch profits of +1 of $10 or $5. The difference between the two is impossible to term. There's no way we can look at the two trades and say this one was a bad trade and this one was a good trade. The good trade made $5 and the bad trade made $500. Yeah, because the bad trade got lucky and the good trade didn't. But I'll take the bad trade any day of the week. Do you understand that? I'll take the bad trade any day of the week in terms of outcomes, but I'll take the good trade any day of the week in terms of the risk. And the risk is where we lose the money. We might occasionally get a big win, but if it takes you 20 trades and you've lost your account before that big win comes along, you're obviously screwed. So we've always got to remember trading is about that element. It's about maintaining your discipline, sometimes getting lucky, but being in the game enough, often, more than often enough, to take advantage when the swing happens. We've had one swing on gold today, one real swing on gold, and we got lucky because we were in the swing on gold when it happened. We made our luck by consistently playing the swings. You can see that we got one lucky swing on gold, and that's where we made our big money. But all of these trades here were every bit as good as the buy trade that we had here. Every bit as good. Some of them might even been a little bit better. But this one got lucky because we were in the game long enough, consistently enough, that eventually one of the trades broke. And if it didn't, it didn't. That's not what defines our ability as a trader is the outcomes. What defines our ability as a trader is the inputs. The inputs. Somebody can select a horse at 50-1 for the Grand National, and it wins. And they suddenly claim that they're the best horse picker in the world. Well, they got lucky. They might have had some inside information that improved that luck, that gave it a better probability, or alternatively, they just selected it because they liked the silks. And that was it. The point we're trying to make here is that you should always be judging your performance on the risk that you take to achieve the outcomes, not on the outcomes. If you always base your trading on outcomes, you will never be successful because it's all based on luck or lack of. And therefore, on that basis, you're always going to be waiting for the next big winning swing. And that's not how you trade. That's not how you play the markets. You play the markets to stay in the game long enough for the luck to work back in your favor. Because there's only been one swing today, and that's it. If I stopped working at 2 o'clock today, then did I have a better day or a worse day than the guy that caught this? Well, based on the buys and the sells that I took, I had as good a day as the guy that caught this trade. Because I traded what I could at the right times, at the right prices, in the right areas, doing the right things. The fact that it didn't break anywhere isn't of my doing. This break higher is not of my doing, but I got lucky that it broke higher. If it's of your doing, because of the size of trade you're using, because of the ability to manipulate price, so be it. That's a different game altogether. But this move higher is not of your doing, and therefore it is just the fact that that's what happened. I don't claim any credit whatsoever for the market breaking higher, but I was in at the right price and I made some money. Does that make sense to everybody? So manage your risk. Make sure that every trade you take has the right qualities to be a successful trade, and turn the luck into your favor.